We're now going to take a look at the accounting equation and double entry bookkeeping. So during this lecture, we're going to look at the accounting equation, double entry bookkeeping, and by the end of it, you should be able to state the accounting equation itself. You should also be able to complete some very basic double entry bookkeeping. But before all of that, we're going to take a look at categorising the accounts. So they are the things that we're going to be covering during this lecture. So if we start off then by thinking about the actual accounts themselves, first of all, we've got assets, and that's a type of account, and these are things that the business owns. So examples of assets are cars, because the business owns that car, bank accounts, because again, the business owns the money that's in the bank account, stock possibly, because again, stock is owned by the business. So assets are things that the business owns. We've also got liabilities, and they are things that the business owes out. So this is more like loans, for example, or suppliers that you owe money to, or even HMRC. If you owe tax out to HMRC, that again is a liability. We've then got capital, and this is money that's been invested into the business. So this is either by the owner when the business is first set up, or if more money is required in the business, or it could also be through profit, which is when the profits that the company have made in the previous financial year are then reinvested into the business to ensure that it grows and gets bigger and develops further. Another categorisation of the accounts is revenue, and this is the money that the business earns. So this is usually through sales, but it could also be through interest received, so bank interest that you're receiving into the company. We've also got expenses, and these are the general running costs of the business, and included within expenses we can have wages, so the fact that we need to pay our staff to work, rent, so the rent of the premises, we need to pay that out, so that's an expense, it's a running cost of the business. We've also got purchases, and these are the goods that we're buying so that we can then go on and resell them, so they are your purchases. And another example would be things like electricity or gas, and it's just general running costs of the business. We need to have the lights on, we need to have the heating on. So the accounting equation itself then. The accounting equation is that assets minus liabilities equals capital. So for the assets that we own in the business, if we take out what we owe out, so we've got what we own, so the money in the bank, the cars, etc. If we take away from that what we owe out, so the liabilities being loans or suppliers that we owe money to, what we're left with, what's left in the business, is the capital. So either what's been invested by the company, by the owner of the company, or the profits that's been reinvested. So if we said we'd got £10,000 worth of assets, if we take away from that the £7,000 that we owe out in loans, we're left with £3,000 worth of capital. So we're now going to take a look at the debits and the credits, and this is like a completely different language, and it will take time and practice to understand which accounts you're going to debit and which accounts you're going to credit. In accountancy, for every debit there must be a credit, so you can't have a debit entry without a credit entry. And what we need to understand is which accounts are debited when they're increased and which accounts are credited when they're increased. And then which accounts are debited when they're decreased and which accounts are credited when they're decreased. So one way of doing this is using PEARLs. And PEARL stands for purchases, expenses, assets, and they are all debited when they're increased. And you've also got revenue, liabilities, and then we say source of funds, but that's the capital, and they are all credited when they're increased. So if you increase a purchase account, you're going to debit it. If you increase a revenue account, you're going to credit it. And the opposite is true when they're decreased. So purchases, expenses and assets, when they're decreased, are all credited, whereas revenue, liabilities and the source of funds, when they are decreased, they're all debited. So if we take a look at a very basic example, we've said that we've purchased something, so we're going to buy something that we're going to resell at a later date. So we've purchased, let's say we've purchased some books, and we've purchased £400 worth of books, and we're going to resell those on at a later date. And we've bought it, we've used cash to buy it, so we've been to the bank, we've got the money out of the bank, and we've gone and bought it. Yeah. So in doing this, we've increased the amount of purchases that we've got by £400. And we know that using Pearls, if we increase a purchase account, we're going to debit it. So we need to debit our purchases by £400. We also know if we've got a debit entry, then we must also have a credit entry. So we need that corresponding credit entry. And the other entry is going to go to the bank account because we've taken money out of the bank to pay for the books. Now the bank account, that's classified as an asset because if we think back, the bank's got money in that the business owns, so it's their money, it makes it an asset. And if we then go back to Pearls, if we decrease an asset, we credit it. So we're now going to credit the bank with £400. So every time a financial transaction takes place, you need to be able to work out which accounts has it impacted on, what type of account are they? So are they an asset? Are they a liability? Are they an expense? And then using Pearls, you can work out, am I going to debit it or am I going to credit it? So we've taken a look at categorising the accounts. So this is it an asset? Is it a liability? Is it capital? Is it revenue? Is it an expense? We've also looked at the accounting equation, and that is assets minus liabilities equals capital. And then we've covered very, very basic double entry bookkeeping. And to complete the double entry bookkeeping, we need to know what type of account it is. So it's the categorisation. And then we need to use something like Pearls to work out, am I debiting or am I crediting?